Yes, so hi everyone and a warm welcome to our channel. I hope you're doing well. Studies and preparations are going on. Starting this video by saying sorry. Sorry that this could not be done earlier. Although I had uploaded some revisions in 100% English for May 25, but there were some other plans and I will admit that I could not execute those. Not an excuse, absolutely not an excuse, but a genuine reason was that we are also getting accustomed to this 3 attempt cycle. Resources have changed, batches have increased, mode of coverage has changed, but now we will be starting with the resources for CA final 100% English language because we have a lot of students and subscribers from South. Okay, so don't worry, now we will be starting. This is the first video out of many that you will be getting. I will take 5 to 7 minutes of your time just to explain how we are going to go about the things for your January 26 attempt, and then we will jump to the supply revision. Okay, so this is for your IDT CA final that is going to be 100% English. My first priority will be to give you the revisions from chapter 1 to chapter number 7, that is still ITC, because this will cover a major chunk of around 35 marks in your paper. Okay, second would be the IDT HOTS. IDT HOTS is that resource that has received a lot of positive feedback. A lot of things you will understand, that small things that you tend to skip I have covered in this IDT HOTS lecture. So this time I will be giving that in 100% English also. And third thing is the main important announcement that I want to make is we have launched live 100% English practice batch for you guys. Now what is practice batch? I will be covering details in a separate video I have already posted on the Telegram. Many students have already registered, but still I will just give you a macro point of view that first of all, this is going to be in English. This will run in the morning and it is a live batch. My 3 focus areas for a practice batch is, first of all, the focus will be on question answers. Sir, what happens many a times we have done the classes, but maybe the classes have not gone very smoothly, or sometimes we have done the classes quite earlier, but now we are giving the attempt and now we want to practice, because see, concepts at the end of the day, you already have revisions. You will be having these revision videos also, but now the point is, are we able to apply the concepts? Are we able to solve the questions? And are we able to reach the correct conclusions? That is what this practice batch was designed. Last time we had launched for Hindi English and we have a lot of positive feedback. You will know about those when the September 25 results are announced. But yes, we will be focusing on question answers and linked concepts. So obviously question answers and the related concepts we will be covering. Every chapter has 1 or 2 critical concepts. Every chapter has 1 or 2 hero concept that I will be touching upon, and I will be focusing on amendment and untested areas of your ICM material by making new Q&A. So new MCQs I form approx 8 to 10 MCQs for every chapter, that also we solve. Now this goes for approximately 45 to 50 hours. Okay, and this will contain your question bank. You will be getting my question bank as well. All the details balance I will be covering in a separate video. So if interested, do register. This will start in the first week of the November or maybe October end as per the results, and it will run till 30th of November. So this is not actually a study, but this is your confidence booster. This is kind of an increase of 20-25 marks you can easily expect, and you will be much more confident. Okay, so that is there. I have already launched. You can pre-book right now. You can plan your study accordingly. I have given the link in the description. Okay, now one last request. I have taken 3 minutes already. One last request. I want your love. Okay, I want your feedback. I want to be in this journey with you. So one request is, if you genuinely like the connect, see, there is a connect that needs to be formed between a student and a faculty. So if you feel that this faculty is able to connect with me, so one thing you can just do is share this video, share the resources with your friends. So because see, this kind of a word of mouth publicity that you say, that is the only thing that I rely upon. Okay, we don't do anything else. We don't rely on any other source of marketing or anything. Only if you like the content, then you can share it with your friends, some WhatsApp groups that you may be part of, so that other students are also able to get the benefit. Okay, so stay connected with me. Now we will be starting with the revisions, and today we are going to pick chapter number 1 supply and some intro definitions. Okay, so we are done with 4 minutes. Let's start. And I will tell you, this line that I say, this is not a marketing tag. IDT like never before. This is an experience that I try to give. So with that, let's revise IDT like never before. We will be starting with the supply chapter. Along with that, first I need to cover some foundation definitions. Now what is foundation definition? Some very important definitions. Other definitions we will pick as the time comes, as the relevant concept comes. Okay, let's start. Now what do you mean by goods? See, understand, goods means Goods means every kind of a movable property except money and securities. Money and securities is outside the definition of goods, outside the definition of services, so outside the scope of GST. Money and securities will always be outside the scope of GST. So goods means movable property, but specifically it includes two more things. First is your actionable claim, and second is your growing crop, growing things on land, provided they are agreed to be CV'd, means cut before supply or under a contract of supply. So at the time of supply, at the time of contract, they are CV'd. Okay. Now with respect to actionable claims, you have to link schedule number 3 here. What is schedule number 3 link here? So all the actionable claims are goods, correct? Now after that, the schedule 3 comes, and schedule 3 basically says that all the actionable claims are outside the scope of supply. What is schedule number 3? Not a supply. So actionable claims are goods, but this will be covered in schedule number 3 except specified actionable claims. So conclusion is that all the specified actionable claims are under goods. Finally, all other actionable claims apart from specified actionable claims will be covered in schedule number 3, means not a supply, negative list. Now what is the meaning of specified actionable claims? It is high court block. High court block means you just have to learn betting, casino, gambling, horse race, lottery, online gaming. If you pick the first letters of each and every this particular clause, it will be translated to this code word high court block, HC block. So you can learn this way, or you can directly learn that these are the specified actionable claims which are under the scope of GST. Okay, so this is the meaning of goods. Now what do you mean by services? Services means anything other than goods. So whatever else is there, that is services, obviously, except money and securities. Now second thing, with respect to money securities, if there is some conversion, for example, you are changing the form, you are changing the denomination, and for there you are charging a separate consideration. So for example, if I am buying USD and I am selling INR, so there that person, that money changer, that exchange is not doing this for free, right? It will be charging a consideration for it. So in that case, it is a service. So just the money in isolation is not goods nor services, but if there is some activity with respect to the money or securities for which there is a separate consideration, then it will be covered under GST. That will be a service. That is the first point you need to note. Okay, so this particular three definitions are done: goods, services, and specified actionable claims. Now one definition you need to understand is the exempt supply. Section 2 clause 47, exempt supply, very foundation definition, very instrumental in your understanding. Exempt supply means three things. Point number 1 is nil rated supply. Point number 2 is which are exempt, that we cover in chapter number 4, and point number 3 is non-taxable supply. Now is there any non-taxable service in our GST? Answer is no. There are 3 non-taxable goods in our GST. First one is the 5 petroleum products that you cover in chapter number 2 charging section. 5 petroleum products are non-taxable. Second is alcoholic liquor for human consumption. Now how is alcoholic liquor for human consumption covered under non-taxable? Two way. First of all, in the charging section also, but in the Constitution article 366 that deals with the definitions, there also this alcoholic liquor for human consumption is clearly outside the scope of GST. And third is a recent amendment, rectified spirit, or we can say undenatured alcohol, which is used for producing alcoholic liquor for human consumption. It is basically one of the important raw material of this particular item. So this is outside the scope of GST, hence it was very sensible to make this put this outside the scope of GST as well. Okay, but I'm marking this again, this is undenatured, not denatured. If it is for industrial use, it is very much in the scope of GST. This is something that you need to note. Okay, now apart from that, there is one more definition you need to understand: supplier and recipient. So before that, you have to understand consideration. What is consideration? Consideration is basically quid pro quo. It is with respect to supply. Okay, supply is a trigger event that we will understand in a few minutes. So consideration with respect to supply is basically when someone is paying you, or he is paying you in money or otherwise. So it can be money or otherwise, but he is doing it to you for the purpose of supply. So if I am teaching you, I will be charging you fees. So that fees is a consideration. Okay, now understand, this is a payment made or to be made. So it is okay if payment is done, or it is going to be made in future and agreement is done, that is also fine, whether in money or otherwise. What do you mean by money? Money means whatever the RBI recognizes as a legal exchange, and it does not involve money which is used for numismatic value, means a collectible coin or some sort of that kind of a thing, that is not considered as money. So this can be in money or otherwise with respect to the supply of goods. So for the purpose of the supplier to give this supply, he is going to charge consideration from you. Now who is paying this consideration? I don't care. It can be a recipient, it can be any other person. So for me, I don't care whether fees you are paying or your friend is paying. I am not concerned with that. I should be getting my consideration. Okay, but it shall not be including any subsidy. This point we will analyze in chapter number 6 when we are talking about the valuation. Second, it can also cover acts and the value of those acts. So basically the monetary value of any act or forbearance means I'm doing something for you, or I am not doing something for you. For example, non-compete fees. For example, non-compete fees. So the monetary value of that act or forbearance is also consideration. Again, I don't care if you are doing it as a recipient or someone else is doing it. Now, this is the basic understanding of consideration. Is deposit covered in consideration? Answer is no. Deposit is always refundable. But if it is non-refundable or it is applied as a consideration, then it will be considered as a consideration. Apart from that, there are two more definitions. One is a supplier, one is a recipient. Supplier and recipient are very easy. Supplier is the person who is giving the supply, includes his agent. And with respect to the specified actionable claims, there is a bit of a, you can say, an extension of the definition of supplier, wherein they include the intermediaries in the definition of supplier. So someone who is managing the supply of specified actionable claims, or someone who is an intermediary or who is owning a digital platform, those people are also covered in the definition of the supplier with respect to specified actionable claims. Now, what do you mean by recipient? Guys, understand recipient, it is important. Recipient, you have to divide the discussion into two parts. Part number one, when there is a consideration. Part number two, when there is no consideration. If there is a consideration, I will just quickly open that definition so it's in front of your eyes. Recipient, we will quickly see. See, recipient will be divided into two categories. One, there is a consideration, one, there is no consideration. If there is a consideration, you just have to see who is the person liable to pay the consideration. So if the contract says Mr. Walimbe has to pay the consideration, then I am the recipient. I am not focusing upon the fact that who is actually paying the consideration for the time being, but rather my focus is who is liable to pay. Who is liable to pay. Okay, and if there is no consideration, you just see who is the beneficiary, to whom the goods are delivered, to whom the services are delivered. Okay, so that is the person, that person will be known as recipient. Now you may have a query that, sir, if there is no consideration, how come it is a supply? Yes, it can be a supply under schedule number 1 that we will cover in chapter number 1. So these were certain specific definitions that you need to know. State will include a UT with its own legislature, means Delhi, Puducherry and Jammu Kashmir. So these particular union territories will be considered as state. If there is an intrastate supply, then it will be CGST and SGST. Okay. This is what you require for time being. Otherwise, the definitions we will cover as and when required. So now let's start with the basic provisions of chapter supply. Let's quickly start the revision. Okay, I want you to be positive in your attitude. Okay, whenever I'm telling something, whenever I'm explaining something, try to write it down, try to scribble it down, so the revision is actually in an active form, rather than you just seeing and I'm explaining. No, I want you to have a register open, just scribble things down, whatever keywords are, that will ensure that the revision is actually effective. Okay, so let's start chapter number 1, supply. Now, what is supply? Supply is a taxable event. What is taxable event? Taxable event gives rise to tax consequence. Okay, next, section number 7, meaning and scope of supply. This is the main definition. Section number 7.1, what is included in the supply? See, supply has 3 parameters. Parameter number 1, it should be of goods, services. Now, we have already covered the definition of goods, services. Now, there can be different forms of supply. So, for example, it can be a sale, it can be a transfer, it can be a barter. I'm giving you something and instead of money, you're also giving me some item. So that can be a barter. There can be exchange, it can be lease, it can be rental. I'm renting you out the property. So forms of supply are not very much relevant. That's not an exhaustive list, it is an inclusive list. So first parameter is it should be goods or services. Second parameter is there should be some sort of consideration. And third parameter is it should be in the course or furtherance of business. Now there is no need as such to understand the definition of business because it includes everything. Your trade, commerce, business, sale, everything is covered in the business. Your race clubs, your club services, your society services, whatever you can think of is covered under the definition of business. So 3 parameters, goods or services, there should be a consideration and there should be a business. Fine. Now, with respect to this consideration and business, there are 1 exception each. So consideration exception is schedule number 1. What is schedule number 1? Deemed supply. Without consideration, it will be a supply. And what is the exception of business? 7.1b that I will cover. Now first talk about 7.1AA. This was an insertion. This was newly added by the government to overrule the judgment given by the Supreme Court in the case of West Bengal, state of West Bengal versus the Calcutta Club Limited. Here there was a doctrine of mutuality which was applied. In simple words, what this case law said, that a club cannot give services to its own members. because club does not have a legal distinct entity, and for GST to apply, for indirect taxation regime to apply, there should be one supplier and one recipient. But the court said that no, in case of club, there is a club and the members which is one and the same thing, one and the same person, but we need two different people for GST. This was something that didn't go well with the opinion of the government. So here government inserted 71AA and specifically said that if there is any activity or transaction by a person other than individual to its members, so they are talking about the clubs and similar people, similar associations, then in that case, provided consideration is there, this was not required to be stated because we have already covered that parameter. But if this is a case, then it will be a supply notwithstanding anything contained in any law, any order or decree of court, tribunal, authority. Then regardless of any judgment, so basically they are trying to create the supreme law and stating that the Supreme Court judgment will also be nullified. In that case, the person and its members or its constituent shall be deemed to be two separate persons, and the supply of activity inter se shall be deemed to be taking place from one person to another. So basically the government said that the club and its members are two separate people. You have to apply GST there. It will be a supply there. Now comes 71B. What is 71B? 71B is simple one thing. It states that if you are importing your services and you are paying consideration, then regardless of the fact that it is for your business or not, it will be a supply. So this is an exception to the parameter of business. Okay, so mark this point that there is an import of service, not goods. There is a consideration, but business condition is not relevant. 71C is just giving a reference of schedule number 1 that we will cover. 71A is just giving a reference of schedule number 2, which basically clarifies that what will be considered as goods and what will be considered as services. That also will cover. And 72 is just talking about non-supply. Non-supply means a negative list, and for negative list we cover three things. One is a notification, one is a circular, and one is schedule number 3 that I will cover at the right time. So actually 71C, 71A, 72 you do not have to cover. You can skip this. Now let's come to certain clarifications. There are a lot of clarifications. Basically, whenever there are queries in the market, CBIC comes with clarifications. We will quickly cover those, and entire our coverage will be as per the ICM material. Okay, now case number 1. Donations received by charitable institutions from individual donors without quid pro quo. Now what is happening here? Basically, I am giving a donation to a charitable organization. If three things are satisfied, three conditions are satisfied, this is not a consideration, means it won't be under supply. There will be no aspect of GST. Condition number 1, I am making this donation to whom? I am making this donation to a charitable organization. This is my condition number 1. I am making a donation to a charitable organization. Condition number 2, it has an element of gift or donation. So basically the nature is gift. I'm not expecting anything in return. And condition number 3 is the main one where the analysis will happen, that purpose is philanthropic. Purpose is philanthropic means there should be no commercial gain involved and no advertisement, no reference of the business activity. Okay, so for example, let's take it in a very simple example manner, that I am giving 1 lakh rupees to a nearby charitable organization. Okay, it has an element of donation, but after the donation they have a notice board where they write where they mention all the donations. So they wrote that 1 lakh rupees received from Mr. Siddesh Walimbe. This is fine. This has no element of commercial gain, no promotion, no advertising. It won't be a consideration. But in the second case, for example, they write received from Mr. Siddesh Walimbe rupees 1 lakh, Siddesh Walimbe, comma, chartered accountant, IDT faculty with BB Virtuals. Now this is something wrong. Now I am getting a element of promotion here because they have made a reference of my business. So this has lost its philanthropic purpose. This has lost its philanthropic purpose. There is an element of advertisement. Case number 2, another example we'll take. For example, there is one person. Now this is Majnu Bhai. This is a character in a very hit movie, Welcome. Okay, so suppose he has made one painting, and this painting he is exhibiting for supply to the gallery. So he is not selling it right now. He is just exhibiting. He is sending this painting for supply in a gallery. And if tomorrow the people who will be visiting the gallery, if they like the painting, they will buy. So currently when I'm sending the painting to a gallery, when I'm exhibiting it for supply, is this a trigger event under GST? Is this a supply? Answer is no, because there is one parameter missing. There is no consideration. Yes, I can be a supplier, gallery can be a recipient. There is an element of goods. The painting is a goods movable property, but right now there is no consideration and hence there will be no GST. Sir, but you told na that in case of no consideration, schedule number 1 can apply. Yes, but we are yet to cover that. Let me tell you before the coverage only, that here schedule number 1 is not going to apply. There is no application of any para. So we will cover 4 paragraphs in schedule number 1 and then we will see. Okay, but yeah, currently because of no consideration, this is not a supply. Then comes your case number 3. Case number 3 is with respect to no claim bonus. Now what happens is, let's say he is Sharma ji. Sharma ji is an insured person who has taken a policy from ICICI Lombard. Okay, so he paid a premium. Let's say in the last year he paid the premium, but he did not file any claim. So when this situation arises that any person is paying the premium but there is no claim from his side, the next year generally company gives you a no claim bonus. Now that no claim bonus is in a form of premium reduction. So for example, last year the premium was 10,000 rupees and in the current year they have reduced the premium by 2,000 and they have asked for the total premium payment of 8,000. Now the question comes, is this 2000 any form of consideration? Will there be any element of GST? Is there any supply of service by Mr. Sharma ji to ICICI for which he is earning 2000? Reduction of outflow is an income. So is he earning 2000? Is it a consideration? Answer is no. This is not a consideration. Why? Because the essence of insurance contract was not to earn 2000 rupees, but it was rather to save the expenses on hospitalization. This 2000 is just a mere event. It is not a consideration. Consideration is when you earn that amount. So when I teach you the class, my consideration is the fee. I want to earn that. But here this 2000 was just a mere event. It just happened, sir. It was not an intention to earn. Okay. So the contractual obligation was not to earn this. So Sharma ji was under no contractual obligation to not file claim and earn this amount. It just happened on the side. I hope this is clear. So this is not a consideration. Next case comes with respect to the break. What is this break? See, understand, whenever you get any insurance done for your car, so that is a general insurance company, there is a break or a salvage value which is deductible. So for example, touch wood, my car is met with an accident. Now that is a break, that is a salvage value. There is some value left of that car. I go to my general insurance company and I ask them that this is the car has met with an accident and I have a policy with you. So kindly pay me the policy amount. So let's say the policy amount is rupees 1 lakh. Now what they say is, let's say in the contract, this is decided in the terms and conditions, the value of the break is, let's say, rupees 20,000. Now there are two cases possible. Case number 1, the company will say that we are deducting 20,000 from it and we will pay you net 80,000. Now this is a mathematical understanding, but understand the real meaning, that the word we use is feel factor. Understand the feel factor, what is happening here. When 20,000 is being deducted by the company, it is basically saying that I am not going to take that break from you. You keep the salvage value. The total value of the car is 1 lakh for which you have taken the policy. 20,000 is the salvage value which is still left. So I don't want to buy that break from you. You keep it with yourself. You sell it otherwise. I will pay you the balance 80,000. But on the other hand, if it pays rupees 1 lakh completely, it means it is buying that break from me. It is buying that break or salvage value from me. Now understand what will be the GST implication. In this case, the company does not have any GST implication because that insurance company is not buying from me. If it is not buying from me, it is not going to sell that salvage value later. But in this case, when it is buying the salvage value and later on it will sell it. While selling that salvage value, there will be a GST trigger because it will comply with all the parameters. There will be a consideration of that salvage. Understand, insurance company is buying it from me and then selling it ahead to the salvage buyer. So when it will sell it to the salvage buyer, there the GST implication will trigger because it will be a supply. It is a goods. There is a consideration of whatever that will be charging to the salvage buyer. And yes, all the parameters, it is in the business. Insurance business involves these kind of sale purchases. So you just have to see whether the amount is deducted or not. If the amount is deducted, it means it is not buying it from me. The company will have no liability to discharge any kind of GST. But if it does not deduct the salvage value, means it is buying it from me. So it is saying that I will pay you 1 lakh rupees full and you give me that particular salvage. And now when it further sells it to the salvage buyer, at that time the GST obligation will come. I hope this is clear. Now let's talk about another clarification that came, that is with respect to the warranty replacement. Now what happens under warranty? I get service and the replacement of goods free of cost. Now because it is free of cost, there is no consideration, there is no GST. Very, very simple. Okay. So now case scenario number 1 we will pick is when there is a dealing of the original equipment manufacturer versus me. So I bought a computer directly from Dell. and if there is any replacement happening under warranty, there is no GST because there is no consideration. So no GST, no consideration, no GST. If there is any additional consideration, yes, GST will apply. But main part that you need to understand is when there is a distributor involved. Now, very often you must have seen that you do not deal directly with the people who are manufacturing, but rather distributors. So let's say there are three parties involved. One is Dell, one is a distributor, let's say Aditi Enterprises. Aditi Enterprises is the distributor, and from Aditi Enterprises I am buying, I am the consumer. Now, issue number one is with respect to the distributor and customer. If there is any warranty replacement happening between us, because obviously I have bought the computer from Aditi, so I will hold Aditi responsible. Now, any replacement happens, the same concept will apply. Here there will be no consideration because it is under warranty period, hence there is no GST. So here there is no change from what we covered above. But now tell me one thing, the most instrumental aspect you need to understand here is there is a liability, but liabilities of whom? Who is liable to replace it? The liability is of Dell, but who is replacing Aditi? Because Aditi is involved in the picture and it has dealt, I have dealt with Aditi, so I am dealing with Aditi Enterprises, but this is the actual liability of Dell Computers. Now Dell Computers and Aditi Enterprises will deal with each other. Now that dealing can take place in four different types of dealing can happen between Aditi Enterprises and Dell, for which I have made one particular chart that I will show you very quickly. We will just cover it from a chart point of view. Okay, see. Now we are talking about how the distributor and manufacturer are going to deal with it, because I am assuming that in the chain, in the supply chain, a distributor is involved. Okay, now situation number one, this is a customer, this is the distributor, this is the manufacturer. In situation number one, I called, let's say I am the consumer, I called Aditi Enterprises and asked it to replace it. Okay, Aditi replaced it from its own stock or purchased from the market, I really don't care. Will there be any GST implication here? No, because the parameter of consideration is missing and schedule 1 does not apply here. Now Aditi will call Dell and ask Dell that, hello Mr. Dell, now it is your responsibility which I have complied with, now I want the money. So Dell says in the first situation, okay, no worries, you give me a tax invoice and I will pay you. Will GST apply here? Answer is yes. It is a normal supply, normal taxable event. Okay, all the parameters are fulfilled, taxable invoice is given, GST will be applied, nothing, there is no separate analysis here. Normal GST will apply and Dell will take the ITC. Okay, Dell will take the ITC that the Aditi will charge. Now there comes another situation in which the consumer is asking for replacement from Aditi. Aditi has replaced it from own stock. But when Aditi calls Dell that it is your responsibility that I have complied with, now how should we deal about it? Now here Dell says that don't give me a tax invoice, instead raise me a requisition and I will replace the laptop. So whatever that laptop was bought, whatever that computer was bought, I will instead replace that machine, that particular laptop to you. So you don't give me a tax invoice, I'm not going to pay you the money, but instead I will replenish the stock. So this replenishment is ideally, if you apply technical legal knowledge, whatever we have covered till supply, yes, it could have been a trigger event, but CBIC clarified that this replenishment, you do not apply GST on it. This is clarified by CBIC. It is a relief given by CBIC that please do not apply GST here, because this is indirectly a case of replenishment by the manufacturer to the consumer only, just happening through an intermediary. So at the end here there is no separate consideration, no separate payment being taken, just Aditi is replacing and then Dell is replacing. So here there will be no GST. In the next case, this is exactly like above. Only thing is that here first replacement is happening, here first requisition is being raised. So the computer will go to Aditi and then Aditi will replace that computer which has been taken from Dell. So ideally this and this situation are one and the same thing, wherein replenishment is happening, replenishment of the stock is happening, so no GST. Now situation 3, that is in the CBIC circular, we are covering at the last. This is very important. Now what happened? Customer called Aditi that you have to replace the computer because it is faulty or whatever it may be. So what Aditi did, it replaced that particular laptop, but not from its own stock, but rather from that stock which was bought from Dell only. So let's say Aditi bought 4 computers, 4 laptops from Dell at the cost of 10,000 each plus GST. So 40,000 plus GST was the original invoice. Out of that particular stock, one particular system was replaced to the consumer directly by the Aditi. Now here what will happen? Dell will have to issue a credit note to Aditi. Why? Because the total invoice value was of 4 computers. Out of that, one computer Aditi is not keeping with itself, but rather using it to comply with the liability which was of Dell. So Dell will say, okay, relax, I will give you a credit note. We will reduce the value of 40,000 to 30,000 because now only 3 computers I am selling you net. This one was my liability only that you fulfilled. So here there will be an involvement of credit note. Okay. Credit note will be of what amount? 10,000 plus GST. But this is allowed only subject to one condition, that Aditi Enterprises should be reducing the ITC as well. Because original invoice was 40,000 plus GST. Then Aditi would have taken the ITC on 40,000. But now the value is reduced to 30. So on that 10,000, ITC or reduction will also have to take place. Liability will be reduced for Dell and the ITC will also correspondingly be reduced for Aditi, because obviously whatever the liabilities amount, that is the ITC amount for the recipient. This is the simple situation. This is the simple 4 cases. Now tell me one thing, will this require any kind of reversal by anyone? ITC reversal happens when you take the ITC but your output supply is exempt. No ITC reversal required, neither by Aditi nor by Dell at any case. This was also clarified because everything is happening under the business and this is not an exempt supply. Dell is not doing any exempt supply. It is a part of the business to replace the computers whichever are faulty. So no ITC reversal will take place. Okay. Now what about the repair services? Now guys, understand. I will be taking repair services from Aditi. Now here there is no consideration. So there will be no GST at all. This is plain and simple. But instead, after giving this labor services, repair services means the technician cost or whatever it may be, Aditi will be charging Dell here. And generally this charging will happen via tax invoice. So money will be paid, and just like in the first case we saw for replacement of the goods also, here GST will apply. Here GST will be applicable. Why? Because it would be just like a normal taxable supply. So whenever there is a tax invoice consideration, the GST will apply. So basically we saw 2 aspects, one of goods and one of services. Goods you have to pay attention in the paper with respect to when the distributor is involved, and that too how the distributor and the manufacturer are dealing with each other. Next comes the concept of extended warranty. Extended warranty, let's say I buy the keyboard. I buy this keyboard from Logitech. And let's say this is under 2 years warranty and I want a 3 years extended warranty. Now, if I buy it from Logitech at the same time in the same bundle, it will be a composite supply. What is composite supply? Where there is a natural bundle and one is a principal element. Principal element means the predominant element. Okay. So if I buy this keyboard along with an extended warranty, this will be a composite supply where the principal element will be of the keyboard. So keyboard rate will apply, right? But if I buy extended warranty after buying keyboard, then be it from Logitech or any other person, or I buy extended warranty from someone else, then that will be taxed separately. It won't be a composite supply. Okay. There are 2 types of supply, composite supply and mixed supply. There are 2 types of supply, composite supply and mixed supply. Composite supply is a natural bundle where one element is the principal element. Principal element means the predominant portion. So for example, you go to buy a laptop and you get a laptop bag also. So laptop is the principal element, that is the main thing you went to buy, right? And mixed supply is other than composite supply. So here there is an artificial bundle. How the taxation differs? Composite rate, composite supply is taxed as per the rate of tax of principal element, but mixed supply is the entire value taxed and the GST rate will apply of that of highest item. So for example, there is a Diwali hamper where there is a Coke, there is let's say a Pepsi, and there are some dry fruits. So here rate is let's say 5%, here the rate is 12%, and another item rate is 18%. And entire value is let's say the entire value of the hamper is 2000 rupees. So here the entire 2000 will be taxed at 18%. I hope this is clear. You're not going to tax it separately. One more, a technical difference that I will tell you. If you read the definitions correctly and carefully of composite supply and mixed supply, in mixed supply there is a word single price that is missing in composite supply. So it is possible to analyze that composite supply is a bundle, but price can be different. But still the entire thing will be charged as per the rate of principal element. Then there is a next clarification with respect to the PLC, that is preferential location charge. So when I am buying a property, let's say I want in this building, I am preferring a top floor. I want this particular top floor only, for which the builder says that if you want a preferential location, let's say you want the top floor only, you will have to pay me 10 lakh rupees extra apart from the 1 CR cost of the flat. So here this will again be a composite supply, that is 1.1 CR will be a composite supply which will be taxed as per the principal element. And what is principal element? Principal element is the flat which I am buying. Now is flat under GST? I will cover that in a few minutes when I am covering schedule number 2. Okay, let's move ahead. Next clarification. Now what is happening? ESPPs, ESOPs, RSUs, restricted share units and everything. These are basically the option plans. Okay, so there is a company in India which is giving an option to subscribe for the securities, but the securities are not of its own, but rather parent company which is in foreign, abroad based parent company, of which the shares are being offered in that option. Okay, so this option is given to the employees of HUL, but the shares are of the parent foreign company. Now we have to understand the GST implication on two parts, transaction number 1 and transaction number 2. Now when this employee, let's say he exercises the option to opt for the securities, will there be any GST implication? Answer is no, and the reason is two-way. Reason number 1, securities are neither goods nor services, hence outside the scope of GST. Reason number 2, you know schedule number 3. In schedule number 3, paragraph number 1, whatever employee is doing for us, for the employer, in the course of employment, that is outside the scope of GST, means it is not a supply. Schedule number 3 means it is not a supply. So if it is not a supply, then whatever salary I am giving, employee whatever is doing for me is not a supply, then in return whatever salary I am giving, that salary and perquisites are also outside the scope of GST. Okay, so salary, perquisites, everything will be outside the scope of GST. These are the two reasons why there will be no GST implication here. But now understand one thing. Unilever is not going to give away its shares for free. The cost will be paid. The cost will be paid by HUL, that is the subsidiary company in India. Will there be any GST implication when the cost is reimbursed with respect to the share subscription? Answer is no. Reason is same. Securities are not in the scope of GST. But sir, what if there is some charge which is over and above the cost of shares? What if there is some ancillary charge, any convenience fee? Then that on that particular portion GST will be applicable, and that GST will be applicable under reverse charge mechanism. Why? Because it will be considered as an import of service. What? It will be considered as an import of service because the supplier is outside India, recipient is in India, and the place of supply will fall in India. I hope this is clear. Next, with respect to the cost petroleum, let's talk about it. See, what happens in a cost petroleum is there is a central government and there is a exploration contractor, oil exploration and production contractor. Now with respect to going and exploring the oil, with respect to going, mining and exploring the oil, this requires a license from the government because this is in the jurisdiction of the government. The right is with the central government. So let's say Mr. Adani wants to explore oil. He will have to enter into a production sharing contract with the central government, wherein the central government will give a license that, okay, Mr. Adani, you are allowed to go and explore the oil, but in return of that, you will have to pay me something. What is that payment? How is it calculated? We will just quickly look for an example. Pay attention. Let's say tomorrow Mr. Adani, with the blessing of government, goes and there is an oil discovery and it is sold. Now rupees 10 is, suppose, let's say the total sale. Will there be any GST implication on sale of oil? No sir, 5 petroleum products are outside the scope of GST, we know that. But I'm not talking about the sale of oil, I'm talking about the portion which is going to be shared with the central government under the production sharing contract. If rupees 10 is the total sale value, out of that we will reduce the contract cost. What is the contract cost? That whatever Mr. Adani spent, let's say expenses incurred in any exploration, development, production, or any royalty that he may have paid. So that is the expenses with respect to rupees 10 earning. So let's say it is rupees 2. This particular term is known as cost petroleum. This rupees 2 is termed as cost petroleum, and after deducting rupees 2, this is the net profit that Mr. Adani earned. Now this is the profit petroleum, that is the profit portion. Out of this profit portion, some portion will be shared with the central government and some will be retained by Mr. Adani. Now my question to you is, whatever the portion is shared with the central government, let's say rupees 3, is that under GST? Ideally, yes. All the parameters of supply are being fulfilled. Central government is the supplier, Adani is the recipient, and this is a service wherein a license is given. So yes, it is falling under supply, but it is covered under exemption list, chapter number 4. So it is a supply, but it is an exempt supply. This is the point. Sir, is there any GST implication on cost petroleum? Answer is no, because this is mere recovery of the cost, and Mr. Adani is doing that for himself. Mr. Adani spent the amount to earn that rupees 10, and he did this entire transaction for himself. So there is no two parties involved. This is a mere recovery of the cost. Okay, so here there will be no GST implication. Here it is a supply, but this would fall under exempt supply. This is something to be noted. Now we will talk about certain financial transactions. Okay, see, money and securities are outside the scope of GST. What do you mean by securities? Securities is defined under Securities Contract Regulation Act. One of the items included in the security definition is derivatives. So shares, bonds, debentures, derivatives, all these are outside the scope of GST. Okay. money, with respect to money. Now there are two terms you need to understand: commercial paper and certificate of deposits. These are kind of short term unsecured debts. These are in the form of promissory notes, when one person is promising to pay some amount to other person, and this is considered as money. So certificate of deposit as well as commercial paper, these are also outside the scope of GST because they are considered money. Now with respect to derivative, as I told you, derivative is specifically covered in the definition of securities. Yes, so they are outside the scope of GST. But the forms of derivative that we see in market is future options and forward contracts. Now we don't have to go into the the nuances of financial management and AFM, no. But from our GST point of view, we just need to understand one thing, that whether in that particular contract of derivative, be it in the form of future or be it in the form of forward contract, is there any delivery happening or not. So generally the derivative transactions are entered with respect to some commodity. So for example, some betting, some future, some forward rates are agreed with respect to a commodity, let's say rice. Okay, so now there we have to see in the adjustment in the question that whether there is any delivery happening or not. If there is actual delivery or whether there is actual settlement, that will decide the GST implication. If there is actual delivery and not mere settlement means you just see who has won the bet kind of a thing, that whose rate was beneficial. So basically two parties are entering into contract. One thinks that the price will go up, other thinks that the prices go down, will go down, and at the end of the contract, at the expiry of the contract, they say that I don't want the delivery of the rice, we were just betting on the price of the rice. So there the settlement is taking place. But here, if there is actual delivery of the rice and not any net settlement kind of a thing on expiry, then in that case here it would be considered just like a normal supply of goods. It would be considered normal supply of goods and the GST will be applicable. But if there is net settlement and not a delivery, then this will retain a contract of derivative, and derivative is outside the scope of GST, hence no GST. Secured debts and transactions in instruments such as foreign exchange swaps, interest rate swaps, currency swaps, these are also somewhere deriving value from something else, hence they are in the nature of derivative, no GST. Is this clear? Needless to say that if there is any ancillary charge, some brokerage charge, some documentation charge, some convenience fee, that will be in the scope of GST because it is a separate activity for which consideration is being charged. Next point is with respect to the securities lending scheme. Now, what is happening in the securities lending scheme? There is a lender of securities, there is a borrower of securities, and in middle there is a SEBI intermediary. Lender does not know borrower, borrower does not know lender. They both are transacting through a SEBI intermediary. Now, simple question, will there be any GST implication on lending fees? Answer is yes. Now, in the paper, you have to write one specific line that disposal of securities does not involve GST because securities is neither goods nor services. So disposal of securities wouldn't have involved any GST, but here there is no disposal of securities, but mere lending for which a separate consideration in form of lending fees is charged. So with respect to the lending fees, it is a service, the GST will be applicable. And let me tell you before we cover chapter 2 only that here RCM is also applicable, reverse charge mechanism is also applicable. So this is the line that you need to quote, that disposal is not a supply. Disposal of securities won't come under any supply because there is, the securities are neither goods or services. But here in SLS does not involve disposal. Hence GST will be applicable, and that too under reverse charge mechanism. Also one point to be noted, what about the intermediary fees that it must be charging from both the parties? That is very well under the scope of GST. There was no question on that. Okay, now next concept is with respect to the cash calls under JV. Now what is this cash calls under JV? See, cash call is basically when an operating member of a JV is a joint venture in which there are members. Some are operating members, some you can say are sleeping members. They are only contributing the money. So let's say there are 4 members. Let's say there are 4 members, out of which I am an operating member and 3 are non-operating members. So what is a cash call? Cash call is a call to call for cash. In simple words, a call I am making to call for cash. Now case number 1, if I call for cash and if everyone contributes and I take that money and go and buy a machinery, so here that particular cash call will not be under GST. Why? Because this is essentially a capital contribution, because the money, the cash that was introduced, it was used to buy machinery. So it is in the form of capital contribution. Cash call won't be under GST. But in the second case, what happens? People contribute the cash when I make a cash call, and that cash, whatever is received, the total amount of money, whatever is received, that is taken by me as an operating member, and I use my own machine. Kind of, rather than use, I can say I'm giving my own machine for the use in JV. So this is a transaction of service. This is a clear-cut case of transaction of service. Why? Because I am supplying the service, I am renting the service to JV, and instead of and in respect of that, I am collecting my consideration, which came in the form of cash call. So here the cash call will be taxable under GST because it would be considered as a normal consideration. So you just have to see what amount, what is the use of the amount, whether it is being used to you just go and buy some machinery or some capital goods, then it would be in the nature of capital contribution. But if that money is retained by the operating member in the exchange of his giving of machine for use of JV, this is just like a normal supply of service where the operating member is the supplier, JV is the recipient, and I am giving this machine for use to the JV. I am giving this as service. So here the cash call will be taxable. Only this thing you need to pay attention to in the exam. Okay, now we will be starting with the most important aspect, schedule number 1. What is schedule number 1? 7.1a, one of the parameters of supply is consideration, right? Now without consideration, schedule number 1 will make a transaction as a supply. So in 4 paragraphs that I'm going to cover, there is no consideration, but still it will be a supply. Let's start. Paragraph number 1. Paragraph number 1, I don't care who is the supplier, I don't care who is the recipient. What is happening in paragraph number 1 is supplier is disposing of his business asset on which ITC has been availed. So there is a permanent transfer or disposal of business assets on which ITC was availed. Here Nirmala Tai, finance minister, is saying to me that Mr. Valimbe, we gave you the ITC on the business asset so you could set it off with your output tax, but now you are permanently disposing it off without any consideration. So no, not done, Mr. Valimbe. Now you have to consider it as a supply even without consideration. Sir, how come valuation will happen? That will be covered in chapter number 6, not right now. But yes, currently it will be a supply, and yes, ITC will be used, but without consideration, the supply transaction will trigger because of schedule number 1. And I'm telling this again, it does not matter who is supplier, who is recipient. Question may try to confuse you that a holding company is giving this to its subsidiary. So what? It does not matter. Only you have to see is whether it was a business asset on which ITC was availed, yes or no. If the answer is yes, without consideration, transaction will fall under supply. Paragraph number 2. See, paragraph number 1 is only about goods, but obvious it is not for services. Paragraph number 2 is about goods plus services. Pay attention. Here there is some kind of a transaction happening between two types of people. Either they are related to each other or they are distinct persons to each other. I'm telling this again, I'm repeating, please pay attention. Either they are related person to each other or they are distinct person. It can be goods or services or both, and it is happening in the course or furtherance of business, means it is their business activity, and in that business some transaction is taking place. Is it clear? Now I need to tell you two things. We need to cover two things. Point number 1 is what is the meaning of related person, and point number 2 is what is the meaning of distinct person. Related person comes from chapter number 6, but we have to cover it right now. That is meaning of related person. Explanation to section number 15, which is dealt in the chapter of valuation of supply. Sir, do we need to learn this list by heart? Answer is absolutely no. You just need to cover this. You have to read this twice or thrice so that you are able to click in the exam that okay, this was a related person. Okay, so we'll quickly go through the list. Persons, including the legal persons, shall be deemed to be related. So it is not necessary that only individual can be a related person. See, in general, person means anyone now. Individual, HUF, firm, LLP, anyone. So see, such persons are officers or directors of one another's businesses. So I'm an officer in your company, you are a director in my company. So we are related to each other. Simple. Such persons are legally recognized partners in business. This partners does not only necessarily mean partnership firm, it can be a JV as well. So for example, you and me are partners in a JV, or we are partners in a partnership firm. So we are related person under GST. Employer-employee, very simple. Employer and employee are related to each other. Any person directly or indirectly owns, controls or holds minimum 25% of outstanding voting stock of both of them. So please pay attention what is happening here. There is a company A, he is holding shares in two companies B and C, let's say 26% and let's say 28%. Now here B and C are deemed to be related to each other. Many people get confused when a question like this is asked. Pay attention. A is holding 34%, let's say, in B. Is this related? Answer is no. No, this is not related. That 26% thing that you are applying, that is with respect to one person holding in two companies. So let's say he's also holding in C, let's say 30%. Now B and C are related to each other, not A. Okay, so pay attention. Next, one of them directly or indirectly controls the other. Now, what do you mean by control? The control word is not defined under GST law. We will apply our logic and reasonable assumption that control can come from 51% holding, or maybe there is some deciding role in the corporate policy or operations. This will be given in the question. Okay, so in this case, if this would have been in isolation without involving C, if this would have been, let's say, instead of 34, this would have been, let's say, 51. Then it could have been control, and then it could have been A and B are related to each other. Okay, so that is the basic understanding of the word control. Both of them are directly or indirectly controlled by third person, or together they directly or indirectly control a third person. So basically C is controlling A and B. This is somewhere like this only, and A and B are controlling C. So A and B are together controlling a third person. Again, control, we have to apply reasonable assumption as per the facts of the question. So that will be the case of related person of A and B, or here A and B. So we have to focus, also understand that which two parties you are making as related. Okay, next, they are the members of same family. Sir, what do you mean by family? Family means simple, spouse, children are always family. So my wife and my children, I am not married, I'm just telling you that for example, my spouse and my children are always my family. Okay, apart from that, my parents, grandparents and brother, sister, you can do this like me to try to learn. Parents, grandparents and brother, sister, parents, grandparents and brother, sister, they are my family only and only if they are wholly or mainly dependent on me. So if the question is giving you that my brother is a well-known professional, my brother is owning a factory, that means they are not dependent on you, so they won't fall in the family, and hence they won't be your related person. Okay, last, if anyone is your sole agent, your sole distributor or sole concessionaire, so he is a sole agent for you, you don't have any other agent, so that person will be related person. If you have more than one agent, then no, not a sole agent. Okay, now next meaning you need to understand is distinct person. Now very important, it's very easy, but I see students getting confused, so let's understand this very quickly. Distinct person comes via two particular subsections, that is 25.4 and 25.5. Now what is this 25? This is chapter number 8, registration. Okay, because this is linked to your registration under GST. Now in 25.4, just understand every unit is registered. So for example, as a general understanding, please first try to understand this, that every state from wherever I'm operating my business, I need registration. Okay, because registration is state wise. Plus in one state, I can go for more than one registration. So let's say I have an office in Pune, and I have an office in Mumbai, and I have an office in Nagpur. So these three units are in Maharashtra. So here I have two options. I can go for one Maharashtra state registration, and out of the three offices, I can declare one unit as my PPOB, that is principal place of business, and others as APOB, additional place of business. Instead of that, what I can do is I can go for a separate registration. So Pune separate GST, Mumbai separate GST, and Nagpur it is a separate GST. Are you able to understand? Now in 25.4, what is it saying? First of all, it does not care about how many states you are operating. So it can be in one state, it can be in more than one state. Let's say there is unit A and unit B. Unit A is registered, unit B is also registered. Now be it in Maharashtra or be it in separate states, let's say Delhi and Maharashtra, A and B are distinct persons to each other. A and B, because they are holding separate GST, although same PAN, because all the units in my India will be as per my own PAN. But A and B, because they are holding separate GST, they will be considered as distinct person to each other. And what is in 25.5? 25.5, please pay attention, 100% case would be of more than one state involvement. Now here what is happening? One unit is registered, and other unit is in some other state. Let's say this registered unit is in Delhi. Now other unit would be in, let's say, Maharashtra. So these particular units will be deemed to be units of distinct persons. Concept is same, distinct person. But what is the difference in 25 subsection 5? There is more than one state involved. Sir, how is it possible that in one state you are registered, in another state you are not registered? You should be knowing this, because this is a revision class. In chapter number 8, we cover this, that if I'm making any taxable supply, then only I need registration. So maybe my other unit in another state is not involved in any taxable supply. So okay. One unit is registered, another unit is not registered. This is in Maharashtra and this is, let's say, in Delhi. These will be also considered as units of distinct persons, businesses of distinct persons. Sir, what if this would have been registered? Then 25.4. Now short example, try to comment this Stop this video when I ask this example. Stop that video and try to tell me the answer that, sir, at this point you asked this and this is my answer. Let's see how many of you are able to answer this correctly. Let's say in Maharashtra, I have a unit in Pune and I have a unit in Mumbai. And in these units, for example, I have taken only one registration, one Maharashtra registration. Is this a case of distinct person, 25.4 or 25.5? Stop the video and try to answer. I'm continuing. No, this is not a case of distinct person. Why? Because 25.4 is not applicable. Because I have not taken separate registration, and 25.5 is also not applicable. Why not applicable, sir? Because it is only in one state, not in more than one state. 25.5 requires more than one state. With that, you can have a read if you want. You can stop the video and you can have a read at 25.4 and 25.5. In 25.5, there will be the other establishment in another state. But in 25.4, more than one registration is there. Maybe he has obtained or maybe he is required legally to obtain. I don't care. Focus is on more than one registration. Now let's come back to paragraph number 2, that between related person or distinct persons, there is a transaction without consideration. It would be a supply. Okay. Now next point I'm going to cover is with respect to employer-employee. Employer and employee are related person. Employer and employee are related person, that you know. Clear? Now, with respect to employer-employee, there can be two cases. One can be with respect to a transaction of salary or perquisites. And one transaction can be with respect to gifts. Now, what is the inherent difference between both of them? This particular salary or perquisites is with respect to whatever he is doing for me as an employee. So this will get hit, or rather hit, I should say, this will get covered by schedule number 3, paragraph number 1. Schedule number 3, paragraph number 1, that deals with non-supplies. It states that whatever employee is doing for employer in the course of employment is outside the scope of GST. So when that is outside the scope of GST, means it is not a supply, then whatever I'm giving him, whatever consideration, whatever salary, whatever perquisites I'm giving him with respect to that employment is also outside the scope of GST, But gifts are over and above the salary. So in this particular case, over and above salary means these are not covered by schedule 3. Here GST implication may arise. How come it may arise? Because employer-employee are related to each other. So here paragraph number 2 may apply. Paragraph number 2, schedule number 1 can apply, right? But the law recognizes this fact that in India, employers give employees various gifts, for example, in New Year, for example, during Diwali. So here they are giving a limit now. What is the limit? That gifts up to 50,000 per employee per financial year can be given without triggering schedule number 1. So without triggering any kind of GST impact. But if it exceeds 50,000, let's say employer gives you iPhone 17. On Diwali. Now that is more than 50,000. The GST will apply. It will be considered as supply, regardless of the fact that there is no consideration by the employee, because this is covered under schedule number 1. Is it clear? So in paper, you have to see whether we are talking about perquisites or we are talking about gifts. Because gifts is apart from the salary and perquisites. It is not a part of salary contract. Clear? Okay. Now next is paragraph number 3. Paragraph number 3 is specifically dealing with respect to principal and agent. Now what is the meaning of agent? Agent is someone who is working for me, right? I'm the principal, someone is an agent. He may be supplying on my behalf. He may be receiving on my behalf. Pay attention, he can also receive on my behalf. So here what is happening? There is a principal. Okay, and there is an agent, and now agent is, let's say, supplying to a consumer. So there are 3 parties involved. The question is whether this particular transaction, obviously where I'm not charging consideration, okay, in real life I won't be charging consideration for sending goods to the agent who will further supply the goods. Okay, so here whether this will be a supply under schedule number 1, whether this will trigger the implications of GST, that is the question that we are trying to solve, and that is the question that we are trying to answer in paragraph number 3. Now paragraph number 3 is going to ask us to apply a test which is known as invoice test. Now what is invoice test? In simplest words possible, that this particular transaction, which transaction? This, where the agent is giving the goods, is sending the goods to a consumer. Here the invoice is going to be raised. This invoice is in the name of principal or agent. That is the invoice test. Now pay attention. If the invoice is raised in the name of agent, means on the books, on the record, it is clearly visible that invoice says agent has sold to the consumer. In that case, the principal and agent transaction will also fall under supply. And if the invoice for this transaction is given in the name of principal, so clearly if anyone sees the invoice, it is a clear-cut case of sale by principal to the consumer. In that case, this transaction will not be a supply, because this is not a separate supply, because the invoice is raised directly in the name of principal. So this is, you have to understand the logic, that if the further transaction is in the name of agent, then obviously between me and agent, let's say I am the principal, it has to be a separate supply, because that other one is a separate supply, separate invoice is being issued. But the invoice, if it is in the name of principal, then in that case, this particular transaction will not be a separate supply, because this is one, and there is only one direct supply by the principal to consumer. So no agent in between. So in that case, agent will not fall under the ambit of paragraph number 3, schedule number 1. This is the simple thing you need to quote. Now, there is one line you need to understand, that with respect to the services, if it is a case of agent and if it is a case of services, consideration 100% has to be there for transaction to fall in the ambit of supply. Why? Because paragraph number 3 applies only and only for goods. Please pay attention, not services. Is it clear? So here basically I have mentioned about the invoice test. So the critical question that you need to ask is whether the invoice for further supply means by agent to consumer, is issued in the agent name. If the answer is yes, then further is a supply, current one will also be a supply, means principal and agent, it will be a supply. So any provision of goods from principal to agent would fall under the ambit of paragraph number 3, schedule number 1. But if no, then in that case it won't fall. Is it clear? Now there comes a concept of del creditor agent. What is del creditor agent? In simple words, agent with a guarantee of payment, to the principal. So if my consumer defaults, the agent, that DCA, is going to give a loan to the consumer, and that loan amount will be disbursed to the principal. So basically, in simple words, DCA and agent, there is only difference of that guarantee. That is why DCA is expensive. Commission of DCA is expensive. Okay. Now here the two issues come for consideration from our GST standpoint. First, whether DCA will fall under the ambit of paragraph number 3, schedule number 1. Whether DCA will fall under the ambit of paragraph number 3, schedule number 1. Here the same invoice test you are going to apply. But second issue is, what about the interest? What interest? Which interest? Interest with respect to the loan which is given by DCA to the consumer. What about that interest? Will that interest be a part of valuation? Now here we have to see two cases. If DCA is not an agent under paragraph number 3, schedule number 1, means the transaction is by principal to consumer. In this case, interest will not form part of valuation. Why? Because the sale of goods is done by principal to consumer and the loan is given by DCA to consumer. So DCA to consumer are two separate parties. Principal is a separate party. So here the loan transaction is an independent supply. It is an independent supply. So interest with respect to the loan will not be part of valuation of this particular sale of goods. Apart from that, let me tell you, because this is a revision class, you know in chapter number 4, this kind of an interest with respect to any money advanced is exempt from GST. Is it clear? So in this case, basically 3 activities are involved: sale by principal to recipient, agency services for which there will be a separate commission, and loan which is given by DCA to recipient. But on the contrary, if the DCA is an agent under paragraph number 3, means what is happening? Principal is selling to agent and agent is selling to consumer. This is a supply. This is a supply. Now in this case, if the consumer defaults, an agent, that DCA is giving loan to the consumer and there is any interest with respect to that loan, still can we say that this interest and loan transaction is independent of sale transaction? No. Now this particular interest will form part of valuation of goods by DCA to consumer. The same thing has also been mentioned in section number 15 2D that you cover in chapter number 6, that interest has to be added to the valuation. See, some people get confused here that interest is to be added in this particular supply. No, I'm not talking about the sale transaction by principal to agent. That is a separate thing. I'm saying that this interest will form part of valuation of supply of goods by agent to consumer, because the invoice test is being passed here and the DCA is falling under the agency of paragraph number 3, schedule number 1. Clear? Okay. Next is your paragraph number 4. In paragraph number 4, it talks about the import of service. So what we will do instead, we will do a summary diagram that will link this particular paragraph number 4 with 7.1b. What was 7.1b that we covered? That when there is an import of service and there is a consideration, the business test is irrelevant. So in the paper, you have to do structured thinking. What is structured thinking? You don't have to get excited. Generally, students get excited and they quickly try to conclude the answer. No. See what is the case. If it is an import of service, first step is you have to pause and see whether there is a consideration or not. If there is a consideration, then you apply 7.1b. Schedule 1 has no applicability here. Then business test becomes irrelevant. It will be a supply. But if there is no consideration, zero consideration, you apply schedule number 1, paragraph number 4. There comes two conditions. Condition number 1, you should be importing from related person or own establishment outside India. And second condition, it should be in the course of business. So here consideration is not there, but business condition applies and from whom you are importing applies. In that case, if both are satisfied, it will be a supply under paragraph number 4, schedule number 1. Otherwise, it will not be a supply. Is it clear? So this marks the end of schedule number 1. Now, just two important points. Prerequisites I have already covered. One important point with respect to this molds and dies. Now, understand this molds and dies. Now, this is kind of a this will come in 2-3 chapters. So first, understand what the concept of mold dies is. Molds and dies is basically the tooling cost, which is very expensive. Okay, this is not directly a consumable item, but rather it is used to produce the goods. So there is a term known as OEM, original equipment manufacturer. Let's say Apple. Apple produces iPhones, and let's say there is a component manufacturer which is manufacturing a component of that iPhone. Let's say Foxconn Industries India. I think this has a factory in Chennai or something. So OEM is a basically Apple is an OEM, and let's say Foxconn is a component manufacturer. Now Foxconn is going to produce certain components for OEM. Okay, let's say battery part or outer body part. For that, there will be a requirement of molds and dies, which is very expensive. So generally, what the contract says that this particular cost of tooling, that is molds and dies, will be incurred by OEM, not CM. OEM, not CM. So OEM incurs the cost and sends these molds and dies free of cost to Foxconn. Why? Because Foxconn is going to use that and produce the goods, produce the components for OEM. The question is whether there is any supply here when the goods are sent, when the molds and dies are sent by OEM to CM. Answer is no. Why, sir? Why answer is no? Because you have to apply parameters of supply. Is there any consideration? See, supplier and recipient are there. Okay, this is a supplier, this is a recipient. Is it a nature of goods? Yes, molds and dies are movable. They are in the nature of goods. But sir, is there any consideration? Answer is no. There is no consideration for sending the goods. So this will not be a supply. Is it clear? This will come in 2-3 chapters later also that we will see at the right time. Now let's move ahead and let's start the next part. First, two clarifications. Free sample and gifts are not a supply because there is no consideration unless schedule number 1 applies. If schedule 1 applies, then obviously without consideration it will be a supply. And buy one get one offer, this is nothing to be analyzed separately. It is a normal supply. It is a normal supply where you are getting two things at the price of one, but all basic parameters are fulfilled. Consideration is there, goods are there, supply, recipient is there. Next topic is with respect to schedule number 2. Now, what is schedule number 2? Schedule number 2 is not concerned with whether it is a supply or not. Schedule 2 only is talking and clarifying whether it will be a supply of goods or services. So whatever you are studying, you need to understand the context of it. When understanding and analyzing schedule number 2, you don't have to think about whether it is a supply or not. It will be a supply either under section number 7 or maybe due to schedule number 1. But schedule 2 is just clarifying whether goods or services. Okay. Now the first 4 paragraphs are very simple. Here you have to apply your common sense. Okay, it is purely logical, nothing to be learned as such. That whenever you are transferring title, you are selling goods. Whenever you are transferring for temporary use, for example, I am giving machine for use, I am not selling you the machine, then obviously it is a case of service, right? So see, if you are transferring title or if you are transferring or selling any goods, it would be considered as a nature of goods. But if you are transferring just a right to use the goods without transferring the title, so it's a temporary use, for example, machine on rent, it will be a case of service. Hire purchase is also nature of goods because in hire purchase the ownership is transferred at a future date. But for our GST concern, we are not like in the GST concern point of view, we don't care whether the transfer of title is taking place today or tomorrow. For us, it is still a case of good sale. Land and building. Now with respect to land and building, if you are giving anything on rent, that would be considered as services. And apart from that, here we have to analyze the construction of flats, construction of building, that will be covered later. Treatment or process, this is important. This is a job work service. Now what is a job work? Basically, you are doing some kind of treatment or process, on goods which are belonging to another person. This is a case of job work and it is always considered as a supply of service. This is also covered in chapter number 16, that is job work. Now, transfer of business assets. So, for example, if you are transferring the business assets to anyone, it would be considered as a sale of goods. But if you are not transferring, but you are putting it for private use, so again, this is a temporary use. this is a temporary use, it would be considered as service. You don't have to learn this, it's a simple logic. Okay, next, if you cease to be a taxable person, now there comes a taxability. Why? This part we study in the cancellation of registration. There the supply transactions trigger, there the calculation of tax liability gets triggered, but again it would be goods or service, it would be goods. So for example, this is my business asset and I cease to be a taxable person. Now this would be considered as a supply of goods. Why supply of goods? Why tax liability will come? That will come in cancellation of registration, but yes, it would be considered as goods. Now these are the exceptions. These exceptions are not exactly from schedule number 2, but rather they are linked to other chapters that we will study, that when a business is transferred as a going concern, there is an exemption. Okay, so if there is an exemption, obviously it won't be taxable. And when a business is carried on by personal representative, now when a person ceases to be a taxable person, but the business is carried on by the taxable person, by the taxable person's representative, then obviously right now it won't trigger any supply. There won't be any tax liability because the personal representative is going to carry on the business. So currently it won't be considered even any supply of goods. So these two are not exactly exceptions of being supply of goods, but rather exceptions in the law itself that will be covered later. This would be covered in chapter number 4 and this would be covered in liability to pay. So primary focus in first 4 paragraphs is nothing. It's a pure logic. You don't have to pay much attention, but yes, 5 and 6 it is important. Renting of immovable property, obviously it is service. Construction is service. Now someone is giving you construction activity, repair, maintenance, alteration, but here you need to understand one thing, one particular condition you need to pay attention to, that when you are buying under construction property, under construction flat, it would be considered as services. But you must have heard that if you buy a completed flat, there is no GST. Now how the differentiation is made, there is one condition to be applied. What is the condition? If 100% of the consideration, not even rupee 1 should be received earlier, if 100% consideration is received after the earlier of 2 dates, after the earlier of 2 dates. What are the 2 dates? Completion certificate or first occupation. So completion certificate means an engineer or the government engineer is stating that okay, this building is complete, and first occupation means someone has started living there. It also denotes that the property is complete. So this means now the property is complete and then I am buying the flat. So I am buying a complete flat. And if you apply logic, a complete flat, it's not goods because it is not a movable property. So here they are also excluding it from the definition of supply itself. Are you understanding it? Sir, where is this written? Outside the scope of supply? It will come in schedule number 3. But right now also it is important to tell this because we are talking about construction. So if I buy a completed property, it won't be a supply itself. But if I buy under construction property, it would be a supply, and that too it would be a supply of services. So this will find a mention in schedule number 3 as well. Next, any IPR related rights. So for example, patents, copyrights are transferred against which royalties you are getting. So that is also services. Then IT software, you develop IT software, you design for someone, you make these kind of softwares. This is again supply of services. IT softwares in the pre-GST regime were undergoing double taxation. They were considered as goods also. So VAT was also levied, and they were considered services also. Service tax was also levied. But now it has been clarified that okay, no more double taxation. It would be considered as services. You apply GST. Okay. 6E I will be covering later because it has a special mention. Next, transfer of right to use any goods. So again, I'm not transferring the goods, I'm only transferring the right to use goods. Title is not being transferred, only the right to use goods. So this is a service. Then 2 kinds of composite supplies. Composite supply means goods plus services. Again, these were somewhere going double taxation in the pre-GST regime, but now clarified that it is only services. First is works contract and second is restaurant service. See, in works contract, first of all, understand this has been defined in section number 2 clause 119, but I will tell you here itself. This particular definition in only and only associated with immovable property, not movable. Okay, so when a person is giving us the service of construction plus he is selling the goods. So if a contractor is making your house, he's constructing your house, he's giving you the construction service also, but somewhere the elements in the house, the goods in the house, the brick, cement, AC, bathroom fittings, furniture fixtures, that is also being sold. So it is the nature of composite supply, means goods plus services, but that works contract will be considered as services only as per schedule number 2. Is this clear? And next, restaurant service, again this has goods plus service element because they are selling you the food, but not just selling it, they are serving you the food. So it's a whole experience. So that is also composite. But again, the restaurant service is considered as supply of services. Is it clear? And obviously alcoholic liquor for human consumption is non-taxable. So this was my schedule number 2, not very much directly testable. So you just have to focus on whether schedule number 2, what is schedule number 2 trying to say? Only if goods or services. Supply, apply section number 7, schedule number 1. Not a supply, apply schedule number 3. But goods or services, schedule number 2. Okay. Now next we will cover certain clarifications again. Tenancy rights. Now what is tenancy rights? It is also known as Pagdi system in some northern states like Rajasthan and everything. But okay, just understand what is the meaning of tenancy rights. See, with respect to tenancy rights, there is a premium which is known as tenancy premium, which is taxable under GST. Now what is tenancy rights? Tenancy rights and the tenancy premium can be paid by owner. Let's say there is a property owner and there is a tenant. So tenancy premium can be paid by tenant to the owner or by owner to the tenant. Now understand why the payment of tenancy premium is done. For example, tenant wants a right to say that who will be the tenant instead of him. He wants to give this right of tenancy to someone else. He wants to appoint someone else as a tenant. So for this right, see, originally this right is with the owner, but now he wants this right for which he will pay a tenancy premium. And similarly, sometimes the owner pays tenancy premium to the tenant. Why? For early vacation of the property. So either way it can be paid. But the point is, from our GST point of view, is this premium taxable? Answer is yes. This is as good as a rent. It is a right with respect to use of property. So for us, it is schedule number 2. It is a supply of service and it will be taxable. Now in the paper, they will give you that for this tenancy premium and for this transfer of tenancy rights, stamp duty is paid and registration charges are paid. So would it be considered as a sale of immovable property? Because sale of immovable property is outside the scope of GST. Schedule number 3 will clarify that. Land building is outside the scope of GST. It is not a supply. So if stamp duty and registration charges are paid, does this mean the tenancy premium is also outside the scope of GST? Answer is no. Just because stamp duty and registration charges are paid due to local laws, due to the municipal laws, it does not change the nature altogether of how the tenancy premium would be taxed. It would be still a supply of service and GST you have to levy. Now in exemptions chapter, we will cover one of the summary charts, that is with respect to the property on rent. Now what is happening here is rent is paid by the tenant. Now sometimes this periodic rent is exempt when the tenant pays to the owner. If this particular rent is exempt, then the tenancy premium is also exempt. I'm repeating, if a tenant is paying rent to the owner and the rent is exempt, then the corresponding tenancy premium is also exempt. But if any tenancy premium is paid by owner to tenant, that is always taxable. Pay attention to that. Next is the clarification with respect to the priority sector lending certificate. Now government has given targets to every bank. For example, in agriculture sector, you have to make rupees 100 lending. Now tomorrow HDFC makes total advances, the loans of around, let's say, 150. And ICICI has lent the amount of lending by ICICI is, let's say, rupees 90. Now HDFC Bank has clearly overachieved the target and ICICI Bank has clearly underachieved the target by rupees 10. So what can be the case here is HDFC Bank can sell this priority sector lending certificate to ICICI Bank worth of rupees 10. So ICICI will hit the target and HDFC will fall back to 140, but still it is above the target. So both banks have effectively achieved the target, right? Now our context is the GST taxation and the taxability of the sale of priority sector lending certificate. 3 things you have to learn. First of all, priority sector lending certificate are considered as goods. They are not securities. RBI has clarified this. Second, the nature will always be in the interstate nature. So IGST will be levied. This is always the case. And third, it is also taxable under reverse charge mechanism. You have to understand these 3 things with respect to priority sector lending certificate. Goods, IGST and reverse charge mechanism. Forget who is the supplier, forget who is the place of supply, always IGST. Next is the sale of food and beverages at cinema. Now here there are 2 cases possible. Let's say tomorrow I am going to watch a movie. Okay, let's say I am going to watch a movie at PVR Inox. Okay, not PNR, PVR Inox. And there are 2 cases possible. Let's say I buy a ticket of rupees 1000, which includes the cinema as well as the cost of Pepsi and nachos at which I will be served in the interval. Okay, I'm pre-buying it. So this is a case of composite supply where the principal element is buying of the movie ticket. Okay, but in second case, let's say I buy a ticket of rupees 300, which is only with respect to movie, and then in the interval I go to that kiosk in the interval and there I buy Pepsi and nachos. So here the food and beverage will be taxed separately as a restaurant service. Mind you that the kiosks and the eating joints, they are also termed as restaurant only. Is it clear? Next, shares held in subsidiary by holding company, is it a supply of service? So for example, Reliance Industries is holding more than 50% in Reliance Jio. Just by holding these securities, is this any supply of service? Why this query came in the market? Because of one of the SAC code, that is Service Accounting Code 997171. This particular 997171 had these words such as this particular entry is specified: the services provided by holding companies, that is holding securities of companies and enterprises for the purpose of owning a controlling interest. Because of this, there was a lot of confusion that just by holding more than 50% or having any controlling interest, does this trigger any kind of supply? Because there is an SSC code on it. It was clarified that no, just because there is an SSC code does not mean it is a supply. For supply, there should be the parameters which should be fulfilled. So those parameters are goods or services, consideration, and business. So here there is no supply of services. Next we talk about that paragraph number 5e, that paragraph number 5e in schedule number 2, which basically says that whenever you agree to any obligation, to do something, to refrain from doing something, or to tolerate something, this is termed as what? This is termed as supply of service. Just point to be noted that this obligation should not be legal, and two more conditions. First is consideration requirement, that is not to be said again. Obviously you need a consideration. And second is important, there should be an agreement with respect to this. An agreement means it can be expressed, it can be implied by the act of action, by the actions of the parties, but yes, there needs to be some form of an agreement. Okay, so for example, non-compete fee. So non-compete is I am refraining from competing in a business because I have taken money from the other party. So this is the case of supply of services. To do something, to tolerate something. For example, there is a loud music in my area. I tolerate the loud music in exchange of some money being paid by that event organizer to me. So here I am tolerating something. To do something, anything. For example, there is a waste which is being generated by my factory, and because of some people in residential area, I agree to treat that particular waste before disposing it off in the environment. So I am agreeing to do something and I charge money from them. This is again a supply of service. Now, with respect to this, there was a taxability of few items which was clarified by the institute, basically by the CBIC, but your ICM material includes this particular item as taxability of few items, and this can be asked directly in the exam. Okay, now some items are not taxable because they are not a consideration, and some are. You need to learn this. I will give you a short, simple, sweet table from which we will revise this particular topic. Okay, you can take a photo if you want, it's fine. I will give you that table directly. This is our class notes that is going on in the exam oriented batch. Some of you might be in that batch. See, this is a short table that I have made. Understand, I will start with the those items which are not a consideration. So for example, liquidated damages. We will understand this and all others will fall in the line on the basis of same explanation. What is liquidated damages? Liquidated damages is, let's say you and me enter into a contract, and there is a clause that whoever breaches this contract will pay rupees 1 lakh to other party. This is known as liquidated damages, means the amount is quantified in the contract itself. When it is not, it is known as unliquidated damages. But let's stick to the topic. It is, let's say, liquidated damages. Now I am going to, let's say I breached the contract and I paid rupees 1 lakh to you. You are Mr. X. Okay. So I paid rupees 1 lakh to you, Mr. X, because I committed breach. Now the question is that 1 lakh rupee taxable? Answer is no. Why? What was the essence of the contract? Did you enter into this contract for me to commit breach and earn that 1 lakh rupees? No. Our both essence of the contract from both of our sides was that the contract should be performed. We didn't enter into this contract to earn the liquidated damages amount. The liquidated damages amount is a mere flow of money. It is a mere event. It was only to discourage the breach. It was never an intention to earn the amount. So can we say it is to tolerate the breach? No, it is to not tolerate the breach. I'm repeating, this liquidated damages is not for you to tolerate my breach, but rather it is for you to not tolerate my breach. This is a golden line that needs to be there in your answer that I mentioned here as well. And on similar basis, liquidated damages, non-taxable. Penal charges which are charged by the banks, they are to discourage any non-compliance or contravention of bank loan. Again, they are kind of liquidated damages only, clarified by the CBIC recently that penal charges are also outside the scope of GST. Earnest money forfeiture, when there are government contracts and you pay earnest money, you win the contract, but then you fail to comply with the contract. Again, that is forfeited, but that is not a consideration. Advance forfeited, property sale advance forfeited. Check dishonor fine penalty. Then violation of laws, and if there is any penalty levied, here everywhere the same line will apply. It is not to tolerate, but it is to not tolerate. The essence is not to earn that amount. Here, the essence is not to earn this check dishonor fine from you, but rather my intention was you should be giving a correct, a good check only when you have the balance in your bank account. Violation of laws, penalty is being levied. No, it is not to tolerate, but it is to not tolerate any kind of violation of laws. Forfeiture of salary. So you enter into contracts, employment contracts, and you sign a bond amount. So those bond amounts, if they are enforced tomorrow, that is not a consideration for company. Is it clear? The company is not earning it. It is just a flow of money transaction. Next, fixed charges of power. Now, sometimes the electricity companies, distribution companies, they charge variable amount and fixed amount. So for example, if the minimum your use of electricity is less than 5 units, then they will charge you a fixed power rate, and beyond that there is a variable power rate. So when it is charging you the fixed power charges, whenever the fixed power charges are being levied, does it imply that the company is tolerating you not using minimum 10 units? No, sir. Whatever, 5 units or 10 units, no, that is not the essence of the contract. The essence of the contract is just that they are providing you electricity. Just because they are charging this fixed power, this is just a mode of charging in a fixed manner and variable manner. It is just a way of charging, just a way of business, how they are conducting the business. It is not that anyone is tolerating you not using. Anyone is, the distribution company, electricity company is not tolerating you not using 5 units. It does not care. It is not tolerating anything. It is just a way of charging. So this is something at the end you have to learn, because in paper you won't have that much time. It will be one of the adjustments of large question. Okay, but we will differentiate this from these particular items where it is a consideration. Now here the nature of industry is changing. Somewhere the tone is changing. Somewhere the understanding is changing. Late fee or penalty. I give you goods, and let's say I sell you classes, and I tell you that, hello mister, by this date you have to pay 5,000 for my class, and beyond that you have to pay 5,200. Somewhere I am tolerating you paying late. I am putting it in the contract itself. There is an agreement itself. I am accepting late payment. This is late fee. It is a part of consideration. Okay. Tour and travel related forfeiture amounts. It is a natural bundle. It is a composite bundle where the principal element is the travel and tour, not the earning of these forfeiture amounts. Termination fee in case of you leave the lease early. It's a 1 year lease. Let's say with respect to a machine, there is a 1 year lease, and in 6 months I want to vacate. So there is a termination fee which is levied as per the agreement itself. It is a part of consideration because the person is tolerating you leaving the lease early. Now I'll be very honest with you. In the class also we get this discussion that, sir, somewhere this is subjective. Some people may still think that this is not for tolerating but for not tolerating. So as I say, at the end of the day, this is a subjective matter. That is why the CBSE clarified. So at the end of the day, you have to learn it. Okay. So termination fee, lease, or loan repayment penalty, or utility bills, for example, your gas, electricity. Clearly, you must be seeing that by 25th, you have to pay, let's say, 110 rupees. After 25th, you have to pay 115 rupees. So that rupees 5 is a consideration to tolerate something, that is late payment, as well as cancellation charges in hotel, travel, and tour industry. So these all are taxable. They are consideration. They are for tolerating. But here they are not for tolerating. Okay, here they are for not tolerating. So this is somewhere you have to learn this now, because in exam they will ask this directly. So this is the entire topic done. Next topic is non-supplies under GST, means the taxable event is not triggered. Now non-supplies come via 3 cases. One is schedule number 3, one is a notification, and one is a circular. First we will see schedule number 3. Paragraph number 1 is plain and simple. Employee doing anything for employer in the course of employment. This is also important, in the course or relation to employment. If anything is beyond employment, it will be taxable. It will be a supply. Employee includes casual workers as well. Now here there is one example that I would like to cover. If any amount is paid by employer to employee for non-joining a competing business. So if let's say I'm Amazon, I am hiring you as a software development engineer, and beyond the salary, I pay you 10 lakh rupees for not joining Flipkart. So this particular amount, is it with respect to course of employment? Answer is no. For course of employment, I'm paying you salary. The extra amount I'm paying is so that you don't leave my company and join someone else. So this is not covered in paragraph number 1, schedule number 3. It will be under GST. You are giving me the service of refraining from something. Refraining from what? Joining a competitive business. Is it clear? So first is done. Next, services by our court, tribunal, any high court, supreme court, district court, national company law tribunal, appellate tribunal, as well as consumer disputes redressal commission. These are also like tribunals. They are not exactly tribunals, but they are like tribunals, clarified that there would be no GST. Then everything with respect to our government. So basically government, your justice system, even lawyers, even legal services are also outside the scope of GST by way of exemption. They are not covered in schedule number 3, but we will cover it in exemptions. So next is your court related thing is done. Now next is your constitutional post and government, MP, MLA, member of parliament, local assembly, everything, all these services, all their fees and amounts are outside the scope of GST. They are not a supply. So functions by MP, MLA, member of panchayat, municipality, local authority. Local authority I will cover in one of the definitions later. Not required right now and not a very detailed one. B. Any duties by the person who are holding post as per the constitution, for example, Chief Justice of India, Comptroller or Auditor General of India, Election Commission, outside the scope of GST. Then duties performed by any person as a chairperson, member, director in any body which is established by the government. Now understand, further they are saying who is not deemed as employee before the commencement of these clause. There is a body established by government, for example, Central Vigilance Commission. Now, if in that body I am working as an employee, I don't need to come to paragraph number 3. I will be covered in paragraph number 1 itself as an employee. But if I am not covered as an employee, then I can still claim non-supply because of paragraph number 3. So what is the interpretation? If there is any body which is not established by government, government means CG, SG or LA local authority. So there is a non-government body and I am not an employee. I am not an employee also. So paragraph number 1 is not applicable. Then in that case, it would be a supply. It would be a supply. So for example, I am working as a consultant in a private company. So that consultancy will be under supply because it is not a government body and it is also not an employee. Is it clear? Next, death related services, funeral, crematorium, mortuary, transportation of deceased, everything will be non-supply for humanitarian grounds. Sale building I have already covered. Building you have to apply that condition of 100% consideration received after the earlier of 2 dates. 100% consideration received after the earlier of 2 dates. 2 dates being occupancy certificate and first occupation. Land, obviously it is not a supply. See, land building not being under GST comes via 2 ways. First is a logical way, that is these are not movable property. So what will you apply? What will you say? Are they goods or services? No, it is not possible. And secondly, they are covered by schedule number 3 also, that is they are excluded from the definition of supply itself. They are excluded from the definition of supply itself. Okay, so what if land is developed? So there is a land here, land parcel, and their pipelines are being laid. There is some soil tilling being done. Does this matter? What if it is a developed land? Still, sir, developed land will still outside be the scope of GST. Developed land will still be outside the scope of GST. But on these development charges that I am paying to the person, plumber, that will be in the scope of GST. But the land when sold, it would be outside the scope of GST. Actionable claims we have already covered. All actionable claims are goods, but all actionable claims except specified actionable claims are covered in schedule number 3. What is specified actionable claim? High code block, casino, betting, lottery, online gaming money, all those covers, all those are covered here. Horse racing, everything is covered. Next is merchant trade. Simple merchant trade. I'm in India. I buy goods in US and I sell those goods directly to a party in UK. So goods are not coming into India. I am in India. Supply could be triggered. Place of supply, everything we will cover in chapter 3. That could be triggered in India, but this is outside the scope of supply. Inbound sales. Now what is happening in inbound sales? I imported goods from US and I put the goods in a warehouse. So I have not cleared it for home consumption. I have not filed the bill of entry for home consumption. While the goods were in warehouse, I sold it to Mr. X. This sale is not a supply. This sale is not a supply. So tomorrow this person will go and get the goods cleared. While clearing, he will pay IGST on import of goods. And later on, once the goods are cleared, let's say he sells it back to me, then it would be a supply because it is post clearance. Is it clear? Next, high C sale is just like that. I imported goods while the goods were in high C. So technically they have not entered India. Do you know what is India in our GST law? Important to understand, not very much testable, but for fundamental understanding, till 200 nautical miles, it is considered as a part of India. Apart from that, obviously our land territory, as per article number 1 constitution, land, our states, our UTs, they are India. Airspace above the our land, that is also part of India. Till territorial waters of India, that is 12 nautical miles. 12 nautical miles, seabeds, that is the underlying part of the ocean, that is also India. Airspace above the territorial waters of India, that is also India. So land, that is our article number 1. territorial waters of India, airspace above the territorial waters and our land, and subsoil and underlying part below the territorial waters of India. Beyond that, the sea part till territorial till 200 nautical miles exclusive economic zone, that is also part of India. Okay, this is just a basic understanding. Beyond 200 nautical miles, it is high sea. So when the goods were in high seas, I sold the goods to you. This is again not a supply. So if you see the feel factor in this part as well as this part as well as this part, everywhere what is happening, the goods are not cleared for home consumption and a sale is taking place. That is not a part of supply. Is it clear? Then paragraph number 9 and 10 were additions. 9 and 10 were additions, recent amendments that I will cover through again one of the diagrams. Pay attention. In paragraph number 9, that is basically co-insurance happening. Co-insurance means two parties are giving insurance contract, insurance agreement, they are entering into insurance agreement, but one of them is a lead insurer. Lead insurer means the person who will be the face of the transaction. So for example, IFFCO Tokyo and ICICI are the insurance companies who are entered into a co-insurance agreement, and let's say the client is A Limited. Now lead insurer is ICICI, he will be the face of the transaction, he will do the dealing, but actually two parties are involved. Okay, so for example, you all friends go for a party, you make some bookings, so one of them makes the bookings and others reimburse that amount, right? So that is how what is taking place here. ICICI is the lead insurer. A Limited pays the total premium of the insurance agreement, that is rupees 10 lakhs. ICICI Lombard will discharge the GST of 18%, let's say, on the entire 10 lakh rupees amount. Now, out of that 10 lakh, one share is of IFFCO Tokyo. Let's say the sharing is 60-40. 60% risk is by ICICI and 40% is by IFFCO Tokyo. So out of 10 lakh, 4 lakh will be given to IFFCO Tokyo. Now my question is, on this 4 lakh, again, do you think GST should be levied? Because in market, the notices were being issued. 4 lakh, no GST again, because on 10 lakh it has been paid, right? It is a mere case of apportionment. It is a mere case of apportionment. This apportionment is not a supply, clarified by paragraph number 9. But only condition is, on this 10 lakh total premium, GST should be paid. I will give you a quick reading. Pay attention. Activity of apportionment of co-insurance premium by ICICI lead insurer to IFFCO Tokyo co-insurer for the insurance services which they have jointly supplied by lead insurer and co-insurer to the insured A Limited in the co-insurance agreement, subject to the condition that ICICI lead insurer pays GST on entire 10 lakh rupees premium paid by A Limited. Now, when we compare this with paragraph 10, now what is happening in paragraph 10? Paragraph 10 is a case of reinsurance. What is the essential difference between co-insurance and reinsurance? In co-insurance, two parties originally agreed to give the insurance service. But in reinsurance, first the agreement is entered by one company and then it is given, a part of it is reinsured to another company. So here originally two parties are not involved. So reinsurance premium is going to be taxed. Then what is paragraph number 10? What is not going to be any supply? I will cover that. Give me 1 minute. Let's talk about the paragraph. Let's talk about it in a diagrammatic manner. Let's say originally there is a transaction between IFFCO Tokyo and Reliance Industries. Okay, Reliance Industries, Mukesh Bhai Ambani. So he is known as Mota Bhai. Okay, Mota Bhai. There is an agreement entered, and let's say the total premium and with respect to this agreement is 1 crore rupees. Is there any GST involvement on 1 crore? Yes, IFFCO Tokyo will pay GST on 1 crore because IFFCO Tokyo is a supplier, Reliance is a recipient. Now, after taking this particular agreement, IFFCO Tokyo is very much scared. IFFCO Tokyo thinks that I have taken a bit more than what I can chew. Okay, I have bitten more than what I can chew. So this is something that is going beyond my risk capacity. So I want to enter into reinsurance agreement. So I will call ICICI to ask for reinsurance. Now here ICICI says, okay, I am agreeing to take 30% of the risk. So obviously premium will also be taken 30%. Out of 1 CR, 30% means 30 lakhs will be the total premium that IFFCO Tokyo will pay to the ICICI. First question comes that on 30 lakhs will there be GST involvement? Answer is yes. On 30 lakhs there will be involvement of GST, unlike co-insurance, because this is a separate agreement. Originally IFFCO Tokyo and ICICI did not go into this together. So this is a separate agreement. On 30 lakhs there will be GST. Then what is the coverage of paragraph number 10? Now it is starting. Pay attention. IFFCO Tokyo says that to earn this 1 CR, we had incurred certain expenses like admin, soliciting. That was, let's say, rupees 1 lakh. So IFFCO Tokyo says to ICICI Lombard that, hello, Mr. ICICI Lombard, you are taking 30 lakhs, that is 30% of the 1 CR. You should also be absorbing 30% of the expenses, because to earn 1 CR, we spent 1 lakh rupees. So it is just fair, right? That if you are taking a share of my total premium, gross premium, you should be taking over a share of my expenses also. ICICI says, okay, why are you crying? Okay, you deduct that. So 1 lakh 30%, 1 lakh 30% of 1 lakh rupees, 30% of 1 lakh, that is 30,000, will be deducted from the premium payment. Now question comes, is this 30,000, which is known as ceding commission, is this 30,000 a supply? Because if, see, it is possible to consider it as a supply because IFFCO Tokyo is earning that amount. Reduction of outflow is an income. While paying 30 lakhs, it is deducting 30,000. So 30,000 is an income for IFFCO Tokyo. Supplier can be IFFCO Tokyo, recipient can be ICICI, and this can be consideration. But this is clarified as not a supply. It has been clarified that it is not a supply. It is given by paragraph number 10. So just I am clarifying, on 1 crore with IFFCO is earning, it will be under GST. ICICI earning 30 lakhs, it will be under GST. But IFFCO Tokyo earning 30,000, earning 30,000 means deducting the outflow. That is an income. That is not a supply. It has been clarified. Let's read it now. Services by insurer to reinsurer, that is IFFCO to ICICI, for which ceding commission or reinsurance commission of 30,000, it is known as ceding commission or reinsurance commission, is deducted from reinsurance premium paid by insurer to reinsurer, that is of 30 lakhs. Subject to the condition that GST is paid by ICICI reinsurer on the gross reinsurance premium which is payable. What is the gross insurance premium? 30 lakhs, inclusive of the ceding commission. Is it clear? Okay, so this is your paragraph number 9 and 10, very, very important. There was a question in your RTP as well for September 25. Do that. It is very simple, plain. Now comes a question, can director be an employee? Answer is two ways, yes or no. There are executive directors, they are employees. If employee, it would be covered under paragraph number 1, schedule number 3, and it would not be a supply. But it is possible that, let's say for example, independent director. Independent directors are never an employee because of restriction of 149 subsection 6, Companies Act 2013. Companies Act 2013. So in this case, independent director, they are not an employee. So their services will be under GST. And also let me tell you, director services to a company are covered under reverse charge mechanism. Clear? So pay attention in the exam, whether it is an independent director or other director. Other director can be an employee, cannot be an employee. It will depend. Now, let's move to the next part. Notification related non-supplies. So here two items are covered, 1 and 2. First is the activities which are interested to panchayats and municipalities, the third level of government. The activities interested are pursuant to Article 243G and 243W of the Constitution. It is nothing. There are certain functions which are interested, and those functions are mentioned in 11th schedule and 12th schedule of our Constitution of India. So whenever panchayats and municipalities are performing those functions, what are the functions? Local safety, local cleanliness, local drainage system, all the local area functions they are performing, with respect to which they earn any amount, they collect any amount, charge any amount from anyone. Not a supply, they are not covered under the definition of supply. So with respect to such functions, any activity is being done, then in that case it would be outside the scope of GST. Is it clear? Next is when any person, let's say it's a shop named Khushbu Wines, okay, Khushbu Wines goes to the state government for asking licenses of alcoholic liquor. Now obviously when these persons are holding these licenses in the areas, residential areas, these are alcoholic liquor for human consumption only. Okay, they are not going to sell industrial alcohol in residential areas. So this is basically the license they are getting is for alcoholic liquor. Alcoholic liquor is outside the scope of GST. One of the raw material, rectified spirit, is also now outside the scope of GST. And now this state government related license of alcoholic liquor is also outside the scope of GST. It is outside supply definition. Okay, so they are asking for this license in respect of which they are going to pay a license fee, which can be named anything, some license fee or any consideration. That is not a supply. Is it clear? But apart from alcoholic liquor, if there is any other license, for example shop, any commercial establishment, that will be in the scope of GST. Is it clear? Can I move ahead? Okay, next is a non-supply which was clarified by a circular. So basically one is schedule number 3, one is a notification in which 2 items were covered, and one is a circular. Let's read the heading. Interstate movement of various modes of conveyance between distinct persons. Now please pay attention what is happening. There are 2 distinct persons. So for example, there is one company and 2 units in 2 different states. Okay. And both are registered separately, but obvious because the registration is state wise. In one state also you can go for more than one registration, but currently I'm taking an example of 2 states, 2 different units. They are registered in the respective states. Now there is a movement of conveyance. Okay, so what conveyance? It can be a train, it can be a bus, it can be a truck, it can be a tanker, a trailer, aircraft, so any conveyance. Now the question comes that sometimes these conveyances move between the company from one office to another. It can be used for carrying goods or some passengers or some employees or some for some purpose of repair and maintenance. Let's say this truck is going to go from Delhi office to Maharashtra office, because near Maharashtra office there is one good mechanic, in simplest words. So there is one good mechanic that is going to repair this particular truck. Now the question comes that will there be any GST implication on the transfer of conveyance itself? Because conveyance as such is a goods or a capital goods, inputs or capital goods. Capital goods in GST means it is capitalized. Regardless of that, can you say that this particular goods is sold by this distinct person to this distinct person? Now you will say that no, there is no consideration. But mind the fact that these are distinct persons. So under schedule number 1, paragraph number 2, between distinct persons, if there is any transfer of goods, then without consideration, this particular transfer can trigger supply. And in real life there were notices issued, but law and the CBIC, the council, recognized this problem and issued a circular stating that this transfer itself of the conveyance will not trigger supply. It is non-supply, provided it is used for carrying goods, passengers, both, or maybe for the purpose of repair maintenance. Needless to say that on this repair maintenance, whatever that mechanic may be earning, that is a GST related supply. But on this particular conveyance, there will be no trigger of supply provisions. Okay. Now, one more thing. That what if this particular conveyance is sold from here? So I am transferring this from Delhi to Mumbai for the purpose of further sale. Then in that case, this will also trigger supply. This will also be considered as a sale transaction liable to GST. So this is also GST and this is also GST. Is it clear? So see, except in cases where such movement is for further supply. So if this is sold further, then this will be considered as supply. But if this is not the case, then such movement shall be treated neither as supply of goods nor supply of services and not liable to IGST, because this is an interstate movement. Now similar thing will apply for rig, tools and spares. These are again kind of items, capital items, which are used for the production, as I told you, in molds and dies. And all other goods on wheels such as crane. So any conveyance, crane, rig, tools, the same thing will apply, because the purpose is not for selling it further, but it is just for transfer from one unit to another unit. Now you may have a query that why have they written interstate? So let me tell you one thing. In real life, we are applying this for intrastate also. This is applicable intra also, because the concept remains same. Now, what if there are two units in the same state registered separately? So they are distinct persons. So their intrastate movement will not be considered as supply. Same thing you will apply. Okay. Next. Now composite and mix I have already told you. Basically composite supply is a natural bundle, which is a principal bundle. Natural bundle means in ordinary course of business, those items are sold together. I have given 3 examples which have been asked in your exam. Excavators hired out with operators. So there is an excavator, along with that operators are hired out, and operators are not available without excavators, and excavators are not available without operator. They are always hired together. So that is a case of composite supply, where the principal element is excavator hiring, not the operator hiring. So the taxation of composite supply happens as per the taxation of principal supply. What is principal supply? The predominant element. See, for example, laptop with laptop bag. So you are there to buy laptop, not laptop bag. Okay. So this is the bundle, but the principal element is buying of laptop. LED TV with stand. So you are buying TV and you are getting stand in, along with it. So entire taxation will happen as per the rate of GST on LED TV. Then policy of mandatorily charging transportation cost from the dealers at the time of invoicing. So you are selling the goods and also charging transportation cost. This is a composite supply. What is the principal element? That is the sale of goods. Is it clear? Okay. So this is what composite supply means. And what is a mixed supply? Mixed supply is anything which is not a composite supply and that is sold at a single price. If you carefully look in section number 2 definitions for composite supply and mixed supply, the mixed supply contains the word single price. That is not exactly mentioned in composite supply. Okay. So for example, a Diwali hamper consisting of chocolates, Pepsi, and let's say chips. So this is a artificial supply. This is a mixed supply, and the taxation of mixed supply will happen as per the rate of whatever the highest rate of tax is involved. Is this clear? Okay. Now there are 3 CBIC clarifications. Very simple. Printing industry. Now whenever you get anything printed, so there inherently there is a composite supply. Okay, there is an element of composite supply because that person is giving you printing service also, and somewhere he's giving you his paper and ink also. But then again, composite supply has to be further seen as per what is the principal element of the supply. Now here two cases are possible. Case number one is when you give the content to the printer. So for example, I got my books printed. Okay, so I got my books printed, I gave my content, the PDF to the printer, and then he gave me the books. So my books here, the principal element is the printing service, because those books does not have any value, that paper does not have any value unless it contains my content that I have gave. So that is the element of service. There the principal element will be element of service. But let's say if I get printed box, napkins printed. So for example, this is a bottle. Okay, now here let's say I bought a bottle with this particular logo design, that is of BB Virtuals. Now does this BB Virtuals logo constitute any kind of content? Answer is no. So here the principal element is goods, that is bottle that I bought. Okay, so printed boxes, tissue, napkins, paper, pen, where I only give the design or logo. Here the principal element is goods. So in paper, first identify as composite supply, then you identify them as goods or services as per the principal element involved. Next, food supplied to patients. Food supplied to patients. If the food is given to an admitted patient, it will be a part of composite supply. The entire bundle is the composite supply, where the principal element is healthcare. So one healthcare invoice will be issued that will contain this particular cost as well. But if the food is being bought by an attendant or a visitor or an OPD patient, so I go to a hospital and in the cafe or the canteen I buy sandwich separately, so that will be taxed separately as a restaurant service. 5% GST is applicable there. Is it clear? And next is retreading of tires. Very simple. Retreading means you get that grip back. Okay, after a lot of use, 3-4 years of use of any tire, basically any vehicle, any motor vehicle or any car, the grip it fades away. So for safety purposes, you get this retreading done. Okay, so that gives you a better grip on the road also. Now here the question comes that that old tire belongs to whom? This is very logical. They have unnecessarily created a confusion, but okay, let's see. If the old tire belongs to me, so I went with my old tire and I got the retreading done. This is a service because I got the retreading done, regardless of the fact that he may have sold that rubber inside, rubber and the other parts in that service. But this is again kind of a job work. So here the principal element is service. But if that old tire belongs to the supplier itself, that mechanic itself or that seller itself, so in this case I'm just buying a old tire. I'm buying a retreaded tire. So basically I'm buying a tire. It is a goods. I'm purchasing goods. It's not a first hand good. It is maybe a retreaded tire, but for me it is a tire purchase. So it is a supply of goods. Some cases, not various, there are not many examples for this, but there are some cases possible in which there is a bundle, but it is neither composite supply nor a mixed supply. The items, whatever the elements of that supply are, they retain their individuality. For example, car servicing. So when you get your car servicing done, you will have a goods related charge separately and labor related charge separately. Goods will be charged as per the goods rate, service will be charged as per the service rate. You will not classify them neither in composite nor in mixed supply. This is one example. So I haven't seen many questions on this, but yeah, it is possible to ask this particular case in exam as well. With this, your supply chapter ends. I hope this was useful. Do let me know your feedback and please share this amongst your friends, because I will be uploading more English revisions and that is only and only for you guys. Okay, so do share and do like and do comment, because it helps me to reach more students in an authentic, genuine manner. All the very best. We'll meet in our next lecture. Bye bye.